Goldman Sachs is bullish on Bharti Airtel. The brokerage sets a target of nearly 1,800 rupees on the stock with a buy rating as the performance of the India business continues to improve. The stock higher by almost 2%.
Bernstein reiterates its outperform rating on Zomato, expecting the company to build its leadership in the quick commerce space. The stock surges close to 2.5% as the brokerage sets a target price of 310 rupees a share.
Biocon rallies as subsidiary Biocon Biologics launches Yes in Tech, biosimilar in the United States, a drug that is used to treat Crohn's disease and ulcerative colitis.
Tata Investment Corp is up close to 7% after Tata Capital's board approves an IPO. The company holds close to 2.2% stake in Tata Capital.
Brokerages Jefferies and Motilal Oswal continue to remain bullish on 361 WAM following its analyst meet. Both brokerages have a buy call. Jefferies sets a target of 1270 rupees on the stock, while Motilal Oswal has a target price of 1250. The stock higher by 3%.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as we speak, actually, the markets are more or less flattish. We tried to pull back a little bit, started off in the red. Then we had the Nifty that was up close to around 50, 60 points or thereabouts. For the time being, it's up to 20 points or thereabouts. And the Nifty Bank that actually was up 150 points, that's moved into the red as we speak. One positive, Mangalam, still more number of stocks advancing than declining.
Absolutely. Over the last couple of trading sessions, though, we've seen some flight towards defensives more than the aggressive bets here, and which is what is reflective in the kind of moves in some of the stocks that we're seeing as well. Case in point, the FMCG stocks. Yesterday, Nestle was doing well. Today, continues to do well. Titan is another one which is seeing some purchase. So domestic facing, low beta names are the stocks which are doing a lot better in today's trading session. Bata, for instance, was up in yesterday's trading session after a big drubbing that it's seen, big underperformance. And the other one which, is doing well is Zomato, obviously aided by some sort of performance coming in from the brokerage note, but otherwise as well, some, domestic facing stocks which have seen a bit of a drubbing from the top, finding some buyers. Shilpa Raut from Prabhudas Leeladhar joins in for a quick technical check on the market. Shilpa, your thoughts on the way we're poised right now after the big fall that we've seen? Do you think 22,500 is a support that we can manage to hold on to before expiry?
Morning, Nigel and Mangalam, and thank you for having me on the show. Talking about the setup, yes, 22,500 should, act just as a, more of a psychological support than anything that is reflecting very strong on data points. Otherwise, 21,800 is definitely probably the likely immediate bottom that we might find in coming sessions. So any rise towards 22,800 for now should be also an opportunity to sell and look for targets of 22,300 to 21,800. So there's little more downside play that is going to happen. Bank Nifty likewise is also looking weak. It is 49,000 to 49,200. The band is there where we might face some resistance. And on the downside, 47,500 is something that we can look upon.
Okay, all right. So sounding a little bit cautious, Shilpa, on the markets, expecting lower levels. And as you said, you're looking to short the Nifty at 22,800 or for targets of 22,300. Individual stocks, what are you looking at?
I have one buy and one sell. The sell would be in delivery. Delivery is, it is completely on a weaker pattern. If you look at option chain also for the next series as well, 300 is acting as a very strong resistance. Even 280 call writers are very, very active. So I believe 280 can be a stop loss and it should be a sell trade with the levels of 240 likely, to be achieving soon. The second one would be a buy in GMR Airports. GMR Airports is witnessing some sort of very aggressive long built up today, and the stock is trading at around 70 odd zones. So this level is very crucial. Once we sustain above 70, you will see a sharp up move towards 75 to 77, and keep a tight stop loss at 67 then.
All right, we take that point. Thank you so much, Shilpa, for joining in. Wish you good luck for the remainder of this trading session. With that, we'll shift focus to our special segment. We get you for ideas for profit coming in from Money Control Pro. Today, we have Varsha Bang joining in with a stock that she's been tracking. Varsha.
Today's stock idea is Domes Industry is a key player in stationery and office supply sector, featuring a wide distribution network with 16 manufacturing units in India and a strong retail presence nationwide. The partnership with Fila Enhance exports opportunities, strengthens R&D, and is expected to drive a significant growth in the future. Domes has significantly expanded its product portfolio and production capabilities across various categories. The company is also constructing a 44-acre facility in Umargaon, set to be commissioned by Q3 FY26, which will support future growth with additional production lines. The company further solidified its market position by acquiring a 51.77% stake in Uniclan Healthcare, diversifying into baby hygienic sectors with products like diapers and wipes. Uniclan facility in Jaipur with an annual capacity of 40 crore diapers under Dome's Wowper brand. Domes targets 20% revenue growth for FY25, aiming for 70 to 75% EBITDA margin. The stock is trading at a PE of 58 times FY26 earnings.
All right, with that, we'll slip into a short break. On the other side, we have Blackstone-owned packaging company EPL, where Blackstone will sell nearly 25% stake in the company to Indorama. MD and global CEO Anand Kripalu joins in to tell us more about this short break. Welcome back. Let's get chatting with the management of EPL. Remember, there's a Blackstone-owned packaging company. It was in focus. The stock fell in yesterday's trading session, currently lower as well, as Blackstone announced that it will be selling nearly 25% stake to Indorama for a little over 1,900 crore rupees. Remember, Blackstone, when it bought the stake first in 2019, the share price was close to around 134. Thereafter, a year later, there was a stake sale of another 23% at a little over 250 rupees. So 100 rupees over the price that they bought it at, and 5 years later the price is very similar, in fact below that itself. So what's the plan for the promoters and the business going forward? We do have with us the managing director of the company joining in, Anand Kripalu. Thanks a lot, Mr. Kripalu, for joining in. You know, the first obvious question, after 5 years of underperformance, Blackstone has decided to sell, half of what it's owning in the company right now. What's the plan for that? And secondly, with the buyer being Indorama, the question that arises, is it a strategic sale? What happens with Indorama? Do they plan to buy a little more thereafter, and there could then be an open offer, etc. as well?
Well, thank you, Manglam. Thank you for having me on this program. First and foremost, as far as Blackstone is concerned, clearly they were able to release some liquidity pressure by selling off 24.9% of their holding to Indorama. But I think even more importantly, Blackstone is retaining 26% plus of their shares. In other words, they are the promoters. They remain in control of the board. The management will continue to be the same. There'll be one board seat that Indorama will get. But Blackstone clearly sees significant value creation opportunity from this business, and therefore is staying not just invested in this company, but also in control of this business. Now, to come to your point about Indorama, so Indorama is a $16 billion conglomerate. They operate in petrochemicals and packaging. They have been watching EPL very closely for many years now. They are clearly impressed with EPL's journey of being one of the fastest growing and most profitable packaging companies in the world. They see opportunities, and they are a strategic investor, therefore. And therefore, we are looking at how we can exploit this opportunity in the years to come.
All right. Hi, Mr. Kripalu, and congratulations on this particular deal. Thanks for highlighting all of that to us. So as of now, could you tell us, we are looking at the financials of Indorama of $15-16 billion of revenues, 26,000 employees. They have a big global presence as well. So as of now, what is their role? Will it be a mix of a financial investor and also looking at helping EPL expand its global footprint? If yes, which geographies are you looking at? Give us a couple of numbers as well. What is the current exposure globally and where is it headed? Please go ahead, sir.
So clearly they are a financial investor, but a strategic investor. They will come onto the board once the regulatory hurdles are completed. And as far as I'm concerned, I have to say that, for me, this is a bit of a win-win situation. Blackstone continues to stay invested and support us in the way they've supported us for the foreseeable future. And Indorama comes in with a wide geographic footprint. For example, we've already announced the fact that we're setting up a greenfield plant in Thailand. Indorama is headquartered in Thailand, and we believe we can leverage their knowledge and capability on the ground to actually get up to speed much more quickly. There are other geographies in Africa where they have a large presence, and we're going to explore possibilities of geographic synergies where we can take their help and their support to actually accelerate our global expansion and our performance as well.
Could you give us a sense on how much can you accelerate that? I'm looking at your historic data. You know, the last 5 years, the compounded sales growth have been just around 8%, with margins staying relatively stable between that 19 to 20% mark, along with very little, if at all, profit growth. ROEs in, low double digits as against low teens as well. So with this, strategic partner coming in with some money and the promise of geographical expansion as well that you speak about, how much faster can your business grow on the top line and the bottom line front from here? What sort of ROEs should one look at from here on?
Well, let me say this. Our stated objective is to grow this business strong double digit, with EBITDA growing faster than our top line. And as you rightly said, we've been a little shy of our double digit top line ambition. So I think very clearly getting squarely into the double digit zone is our first priority. And we will see how we can leverage the knowledge and support that comes from Indorama to actually, as quickly as possible, get to that ambition. Now, specifically, our return on capital employed, if I can just use that metric, has been improving consistently over the last several quarters in the last couple of years. We're now at 16.9% in the last quarter that we reported. And I see our ROC in the foreseeable future clearly getting into the 20s.
20%. All right. So you're saying, say, by the end of FY26, that 20% number should be achieved on ROCE?
I'm not going to give you an exact time by when it's going to happen, but you will see successive improvement in ROCE quarter on quarter and year on year.
All right. In terms of this deal, just clear a couple of points for us, sir. Indorama doesn't come on as a promoter, right? As of now, they get a board seat. They're a strategic investor, a strategic financial investor, and that's where their role ends. Is that correct?
That is absolutely right. We have currently 8 directors on our board.
Okay.
All those 8 will continue. We have a 9th board seat that will go to Indorama.
Got it. Is there any kind of further deal? Because still, the promoter has close to around 25% stake in the company. Any kind of, put call option that is there at a later date, first right of refusal, is there something like that on the cards or everyone, has an understanding that this will be the promoter entity, Blackstone, and, you have Indorama that's come in as a financial investor? Is there an understanding or is there a further deal in the offing?
As far as I know, there's no further deal in the offing. This is the situation that will continue for the foreseeable future.
Okay. And as you said in the beginning, that Blackstone requires some liquidity and they found an able partner. Is there a possibility that they require further, liquidity and they will look to sell even this 24-25% stake? Or is their intention that we want to hold on to this for the next couple of years? Can we assume that?
Well, I can't give you the timeline because I'm not Blackstone at the end of the day, and Blackstone.
But you would be in discussions with them, sir. And shareholders for the last 5 years haven't got any returns on the stock price. So that's why I ask you this. You've told us about business, how you see business panning out with regard to top line growth, ROC improving. But what is the intent of the promoter entity?
My understanding is that they will be here for the foreseeable future because they see value to be extracted from this business.
And, just for understanding, how long is your term as leader here and when does that come up for renewal, sir?
I think it's a 5-year term and it's about 3.5 years done. But, I will stay here till the job is done.
And how would you define as the job being done? Would the job be done reaching a certain financial metric, reaching a certain target, or is it the entire transformation from Blackstone to other promoters, if at all they must?
No, I think it's about establishing sustained double-digit growth with margin well into the 20s and ROC approaching 20 or even exceeding it.
Okay, and I'm looking at a Nomura wrote, they are factoring in that in the next 3 years, Anandji, that the EPS growth will be around 18%. Given that top line is going to grow with focus on margin improvement, and 18% EPS CAGR is doable in the next 2 years?
Well, it's definitely doable. I won't comment exactly on the number, but I can tell you that a significant acceleration is absolutely.
All right, and Blackstone's own returns on this investment have been underperforming as against the market returns over the last 6 years as well, since Blackstone first invested in the company. What would their return expectation from the remainder of the portion that they have in terms of an investment be before they exit entirely? Because that is the nature of the business.
It is the nature of the business for private equity, but honestly, I do not know what their expected return is for the next tranche of divestment as and when they choose to do that, Manglam.
All right, and you wouldn't know how long before they do that, would you?
No, I wouldn't.
All right, we'll keep an eye out on that. Thank you so much for joining in and candidly fielding all our questions. 1.5 years is what you have remaining in this term, but you're assuring everyone that you're on it till such time you reach your target of sustainable double-digit growth.
Get the job done.
With margin expansion and get the job done. We'll leave it to everyone's understanding as to what that getting the job done would be. Would that be to enable new owners of the company to come by? Would that be to facilitate a smart exit for Blackstone as well? Or would that just be growing this business sustainably? We'll let you go on that note. Thank you so much for joining in and giving us these details, Mr. Kripalu. With that, we'll slip into a short break. Come back on the other side. We get you more stock-specific action. Stay with us. From the time we started the show, there has been some bit of a decline in the markets, not too much. Nifty still holding marginally in the green. Dr. Reddy's is one of the stocks which has moved to the low point of trade. Remember, pharmaceutical stocks were doing well yesterday, so maybe some bit of routine profit taking out here. So Dr. Reddy's is lower. But on the other hand, we have Thangamel Jewelry, which has moved to the high point of trade, locked in that 20% upper circuit mark. Remember, the company has opened its first flagship store in Chennai. Chennai is a big market in Tamil Nadu itself. The management had been talking about the possibility of this happening. So we'll keep an eye out on Thangamel Jewelry and a lot of the other broader market stocks which are doing relatively better than the number of stocks which are declining. On that note, we'll wrap up on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.